Good afternoon. Thank you for joining us today for this joint webinar with Manchester Metropolitan University, Chartered Bankers Institute and ICAEW Northwest. My name is Justin Kyriakou, Regional Director for Northwest and Midlands. Today's event is titled, "The World is Uncertain and How Do We, as Financial Professionals, Help Businesses Succeed and Navigate Current Changes?" Today's event is a panel event and we'll be joined by 3 guest speakers. Each panelist will give us a brief presentation around their area of expertise, and that'll be followed by a Q&A session where you get the opportunity to ask your questions. So please remember, if you do have any questions, if there's anything that you want to follow up on, pop it in the QA and we'll be sure to make sure that this is discussed by the panel. Worth knowing that today's event will be subject to a 2 p.m. hard close. So forgive us if we all just sort of disappear off the screen at 2 o'clock. It won't be for any sort of technical issue other than the fact that the event will come to a close. So over to today's panelists. So we've got 3 great panelists for today. Firstly, we're joined by Roxy Lawton. Hi, Roxy.
Hi.
Roxy is the Impact and Evaluation Lead at the Centre of Enterprise at Manchester Metropolitan University. Roxy is HE Fellow and joined the Centre of Enterprise in February 2016. And the current role is part of the SMT within the Centre of Enterprise, leading on the impacts and evaluation of the Centre. This includes promoting the impacts of the CFE portfolio of projects demonstrating the Centre's wider outcomes. Roxy also works across a series of programmes to support leadership, innovation, business growth and business startup, as well as entrepreneurship, and she's been working in the space for over 20 years. Also joining Roxy today, we've got Chris Lawson from NatWest. Hi, Chris. Chris is Director of Banking in Cheshire and Merseyside, 22 years banking experience and 16 years working with SMEs in business and commercial banking. The last 10 years has been leading a team of locally based relationship managers covering Merseyside and Cheshire. Chris and 10 of the relationship managers work around with 2,000 SMEs within that geography, typically supporting SMEs with a turnover of 750,000 up to 2 million, with lending requirements up to 750,000. Chris is part of a much larger SME banking team, around 120 customer-facing staff based locally throughout the northwest of England, supporting SMEs from 750k up to 25 million and beyond in the corporate space. Last but not least, we've got Simon Monks. Hi, Simon.
Hi.
Simon is from Assets and is Director of Restructuring and Insolvency. For those who are not familiar, Assets is a specialist local accounting business advisory group providing audit, payroll, corporate finance, tax and banking and financial services. Established in 2016, is that right, Simon? And it has over 165 offices worldwide already. So if there was an example of growth, there it is.
Established by acquisition, so businesses were in existence prior to that, but yeah.
Yeah, brilliant. Simon's a director at Assets based in Manchester, specialises in advising corporates, lenders and other stakeholders in situations involving financial stress and distress, or where there is a funding requirement. He is an experienced restructuring advisor, having worked in both boutique and large practice on a broad range of subjects and projects across different sectors. Simon's work typically involves anything from accelerated merger acquisition, independent business reviews, contingency planning and formal insolvency. Sector experience includes manufacturing, retail and leisure, banking, government and public sector. So that's the introduction. So as you can see, we've got a really interesting panel and we're looking forward to delivering a great webinar for you today. So I think it's best if we hand over to Roxy in the first instance. So over to you, Roxy.
Thank you. Hi, everybody. So yeah, I suppose in preparation for this webinar, I was kind of thinking about my contribution as a non-financial professional. So this is kind of my take on kind of some of the challenges, I suppose, as finance professionals and kind of thinking about the current economic conditions. So I think from my perspective, as kind of Justin said in the introduction, I work with a lot of small to medium enterprises, so SMEs across the Northwest. And in terms of my kind of take on kind of, you know, the current economic conditions. I think, you know, thinking about the past couple of years, it's thrown an awful lot at us if we think about the pandemic, Brexit. But I think if we take a step back and consider, you know, organisations, human beings, the way we live our lives, the way we work, completely flipped overnight. So if we think about that transition and how kind of we've done business, how we've lived our lives, it was quite, you know, incredible. We've kind of navigated and adapted to quite stringent, strange times. So I think from my perspective, you know, we need to kind of step back, reflect and review that in terms of thinking about building resilient kind of organisations, and taking some of the learning from that period, really. So I think from my perspective, the kind of current challenges, you know, a kind of, I'm not saying that they're not dissimilar, but it's kind of new set of challenges. But if we look positively, you know, as a human race, we adapted and we came through. So I think from that perspective, as financial professionals, there is a lot of doom and gloom, you know, around kind of the challenges around cost of living, post-Brexit. But I think skill shortages, well, there's plenty of things we could add into the mix of doing business at the moment, which, you know, create challenges and opportunities. I wanted to probably raise a couple of points. I think talking about survival rates of businesses, I think we hear and we see figures and we think it's all negative, but I think it's worth reflecting on some of the stats from the Office of National Statistics. And we also commissioned a report last year, with a situational report at the centre around kind of the rates of business, kind of births of business, survival rates. And I think it's worth putting in context that kind of the entrepreneurial kind of creation of new businesses is really significant to the UK economy. You know, it's critical that we have those new births of businesses, but also for a number of reasons, there'll be kind of business failures. I'm not saying that they're not related to external factors, but I think naturally, you know, that is the natural cycle. But if you kind of consider some of the stats from the ONS, there were a total of 357,000 business births in 2020, and 10.5 of those were created in the Northwest. So the Northwest is getting there in terms of that economic kind of contribution. It was the third largest compared to London and the Southeast. So I think, again, you know, the Northwest and that North-South divide is kind of bridging the gap. And unsurprisingly, Greater Manchester is the most entrepreneurial area in the Northwest. So obviously being based in GM and coming from Manmet, I had to kind of get that point out there. But I think it is worth putting it in context. In terms of survival rates, back in 2015, it was over 90%. That has declined significantly. But I think it's worth putting that in context in terms of the discussion of the economic conditions. You know, there will always be those factors. And I think it's important to understand the nature of business birth rates, survival rates. So that was kind of one point I just wanted to kind of flag from my perspective and to add to this discussion. I think, you know, the world in which I've worked for a considerable amount of time now is around the kind of funding landscape, around business support and how kind of small businesses and large businesses access funding. You know, there is a massive infrastructure across the UK. And I think in terms of being business professionals, it's really important that you're aware of that landscape from a signposting perspective, because there is, you know, yes, there is the challenge at the moment post-Brexit. The funding landscape is uncertain. We've had historically a lot of European regional development funding, ESIF funding, which is European Social Fund, and various other funding through the kind of HE sector, which is going to diminish. But I think the point I wanted to flag is, you know, there is significant funding out there and opportunity. In terms of infrastructure, you've got the growth hubs. They're a great starting point in terms of signposting. Chambers of Commerce and other organisations. You've also got, you know, HEIs like ourselves. We do an awful lot, and people don't naturally come to universities to ask or consider kind of business support, but whether it's interns, a knowledge transfer partnership, there is a lot of provision. So think about linking in with local universities. There will always be a kind of business engagement arm within a business school or a central function. And at the centre, we deliver Help to Grow, which is a national flagship programme, again, across the UK, focusing on growth and productivity. In terms of the landscape, I've talked about the post-Brexit impact. There is still considerable funding kind of coming through. So you've got a lot of announcements due to be made as part of the Levelling Up agenda, Innovation Accelerator funding, which is through Innovate UK, UK SPF, which will replace ERDF funding. So I think it's being mindful of other opportunities for your clients as a finance professional and thinking about what is in there in your landscape. And then, you know, we've got Chris here from a bank. Banks as well do an awful lot in that space, whether it is kind of supporting their SME community, delivering programs, incubation space. So I think it's just being mindful of that kind of landscape and ecosystem and understanding what is available and linking in your kind of clients to that. And feeding on my final point, and then I will be quiet, is around that kind of networking and leveraging those networks. I've been involved recently in some consultation with the Greater Manchester Combined Authority around new funding streams. And out of all the cluster events that we've held, it's been the resounding response from the SME community is the power and influence of those cluster kind of I suppose those clusters of sectors, but then the power of the networks, and that, you know, introduction into how you raise finance, or you know, how do you access this funding, and understanding from founders who've been through that, what the pitfalls, what the kind of fast wins are. So I think as finance professionals, understanding the landscape, so whether it is in Greater Manchester around the digital, because that's a massive sector and is in growing, understanding the different sectors, the nuances within those, and kind of signposting your customers to them, because I think that for me is key as well. So I think they're kind of my little comments that I wanted to flag and hopefully add to the contribution of discussion today.
Thanks, Roxy. There was some really interesting stuff there, and it's, you know, we're talking about times being tough at the moment, and funnily enough, it's, although it might feel like it, we're not officially in recession yet. And whilst we are expected to go into recession, I know that EY are saying that there could be a contraction of up to 0.7% in the following year, that it will come. And I think it's the point that you made there that sort of stuck out with me more than anything, is this need for, you know, whatever funding is available, as finance professionals, that we are consistent and joined up in our approach, you know, making sure that we're working with the likes of, you know, the growth company in Manchester and so forth, to connect the dots and to be able to give everybody a service. And on that funding piece, I suppose it's a really good opportunity for me to bring Chris in, Chris from NatWest, who would like to come in and say a few words himself. Chris.
Thanks for that, Justin. And you know, lots of really interesting stuff there as well from Roxy, and actually a couple of things for me to sort of build on pretty quickly in terms of some of the context there as well. So I just wanted to start off today by talking maybe about a couple of enterprise initiatives in the bank that are probably less well known, or certainly not as well known as perhaps they should be in terms of banking. And again, I think this sort of covers off how, you know, NatWest as a bank and the banking sector generally is evolving in terms of the support that's out there for established businesses, but also for smaller startup and entrepreneurial businesses. So there was a couple of examples I just wanted to share to bring that to life from an enterprise perspective. And I think the key, and Roxy's touched on it there, certainly from the startup and growth business angle, is around those entrepreneurs having as much support as possible at every stage, and a really strong network there and in place. So, an internal example and an external partnership example, I thought would be really powerful to bring that to life. So if I start off, for example, with the accelerator hubs that the bank have got, that we've got in NatWest at the moment, we've got 14 nationally spread throughout the UK. And again, these are open to businesses and entrepreneurs that are looking to scale up and wanting support, hands-on support to enable them to do that. These are 6-month fully funded programs. And again, in terms of the offering itself, there's space provided to work from, but also just as importantly to connect with peer-to-peer entrepreneurs, which, as we've already discussed, is really important. There's one-to-one mentoring that's available and happens as a result of that as well, with key experts within the bank on a one-to-one basis, but also actually broadening that out as well and using some of the expertise from other parts that we've got in the bank and also external partners as well, dare I say. And the good news, and again, it fits into what Roxy's mentioned in terms of the appetite for startups at the moment. So we just recently, I haven't got the final numbers yet, but we've just actually closed the latest cohort in Manchester, and it's actually oversubscribed as well. So, and again, what I would say is that there's a lot of variations of these incubators that was mentioned already earlier on. And I think they're really key and a brilliant way of providing that support. Their entrepreneurs need to feel well supported to be in as strong a position as possible to scale up. The next example I wanted to just talk through was more of an external partnership that the bank have got involved in. Some people may have heard of it, some people may not, but it's called Fund Here North. So as a result of some research undertaken a couple of years ago through the bank, it was established that actually funding is still a real big barrier for female entrepreneurs looking to scale up. And off the back of that, there is in particular a significantly low proportion of venture capital funding that actually females apply for and therefore are able to use that money to invest and scale up their businesses. So we've partnered up with Fund Here North, which is basically over 30 actually female angel investors that have come together with a desire to look to invest money in those startup and scale up female entrepreneur businesses. And again, there's combined funding throughout that of around £450 million. And we're already starting to see some successes that have come off the back of that. So that's not internal to the bank, to NatWest, as I would say. That's a partnership that we've got involved in because we've established actually that there's an area there that needs looking at and needs addressing going forward, and a real big opportunity going forward for female entrepreneurs. And again, as part of that, so the blueprint has sort of been provided in the north of England, but I know that is being looked at and is actually being broadened out all over the country at the moment as well. So it's not just predominantly north anymore, albeit that it started in the north of England during COVID. So a couple of thoughts to start off with there from an enterprise perspective. Now, the part of the SME space that I tend to operate in more with my team is the sort of what I would describe as the small to mid SME space. And a couple of things to share on that. So the absolute key thing for me at the moment, which has never changed really, but it's never been more important at the moment, is relationships. So understanding clients, spending time with clients, and having the right expertise available there to help them. Or if not, and again, I think Roxy alluded to this, actually having the right network to be in a position to help and support them at the right times as well. So two of the biggest areas that we're spending time talking to clients about at the moment are the opportunities to grow, clearly. So getting underneath that business and establishing what their plans are, what their ambitions are. And again, to share a couple of examples, that could be working capital funding requirements because there's growth in sales and opportunities to take on bigger contracts, expanding into bigger premises. And again, we're supporting a number of customers with that at the moment, and even exit plans and where other key people are looking to come into the business as well, and what help and support is required around that. And again, a lot of us being proactive, obviously, is trying to make sure that we're giving those business owners the confidence to be in a position to reach out to us and the confidence to look to invest and grow their businesses. The other side, and where we're spending time with businesses at the moment, is, you know, predominantly on some of the biggest challenges that Roxy mentioned earlier. So things like the energy crisis, where we are starting to see utility bills increase for businesses, longer debtor days, so people taking longer to be paid, and labour shortages have already been mentioned. And again, from a banking perspective or a finance professional perspective, I guess for us, it's about what we can do and how we can support our clients to make their life easier. And quite often that's through digital means, or actually whether there are opportunities to look to save them money as well. Because saving money at this moment, you know, in the current climate is obviously really key and important to any business. Just wanted to move on to one of the biggest areas of opportunity that, you know, we're focusing on and talking to clients about at the moment, and that's investing in net zero and green finance. So, and again, what we're starting to see, and certainly where I'm starting to see, is there's been quite a lot of early adoption in terms of bigger SMEs, larger SMEs and corporates. What we are now starting to see is for that adoption to filter through into the smaller and micro space. So, and again, I think part of that, from some of the discussions that I've had with clients and that we've had with clients, some of it is down to supply chains, and we're seeing that more and more often. So by way of smaller SMEs that are actually doing work and have got contracts with larger SMEs and corporates, are now sort of being asked the questions and challenged themselves around their green credentials, because obviously that reflects on the larger organisation. And then it's a case of what we do and how we support those businesses with that. So again, just wanted to share one of the things that we've looked at and we've been spending time talking to clients about is something called Carbon Planner. So this was launched in September last year. It's a free digital tool. It's on the NatWest website. It's open to everybody, so not just NatWest customers. And it's an interactive tool by where business owners can answer a number of questions, and it will actually give them something to work with in terms of an ongoing plan around how they can reduce their carbon footprint. It will prompt them with ideas how to do that, but also whilst reducing costs along the way as well. So investing ultimately now to reduce costs also in the medium to long term. As part of that, it's also important, obviously, that we've got the right solutions in place. So just some stats I was presented with around clean transport last week that I thought would be good to share. We're still seeing more and more business owners gradually move on the journey towards electric vehicles. So, and one of the stats I was provided with last week was 17% of vehicle ownership now is EVs, 40% diesel and 43% petrol. And obviously, I think there's an expectation that will continue to increase over the next number of years, given that obviously new petrol and diesel vehicles will be, you know, will be phased out from 2030. So our role, I guess, and my role as a financial professional, I guess, is just to highlight some of these things with our clients on a regular basis, and also to bring in third parties to help and support with those discussions. So again, things like their accountants and their other professional advisors, seeking advice from those as well to learn about some of the other potential benefits that are maybe less obvious. And then also, you know, we're starting to talk to more and more clients as well about more conventional green funding requirements. So things like biomass boilers, solar panels. We've seen some great examples in the last 6 months of customers starting to invest in solar panels with a view to reducing their energy costs over the medium to long term, LED lighting, and then more broadly building retrofits as well. So there's a customer we've spoken to in the last 6 months that's looking for funding to replace their roof on their units, which has got quite old and tired. And we've had a discussion around actually looking to put some solar panels on there at the same time as replacing the roof and looking to fund that for them. So lots of opportunity in that net zero and green finance space. So just as a summary, and then I'll be quiet. I think a couple of things to summarise for me will be relationships more important than ever to support growth and help businesses with the ongoing challenges that they've got. Net zero, and again, looking to support clients on that journey and having the right solutions, I think will be absolutely key going forward. And again, for ourselves, being proactive, helping and having the expertise to help at the right times where we can, but also us knowing the right people to turn to or to point clients in the direction of actually where we don't feel we can help at that moment in time. They will be the sort of key summary points that I would highlight, Justin.
Thanks, Chris. That was really interesting. A couple of points that I've just sort of noted down from your great update there was investment. I think, again, whilst we look at, for example, ICAEW business confidence monitor that we receive on a regular basis, is despite business confidence having dropped significantly since sort of Q2 last year, one thing that we have seen is that business investment has held, and in many cases it has thrived. M&A activity throughout the Northwest is still very high. There's an awful lot of M&A activity taking place. For those who may not know the term, that's mergers and acquisitions. So there's still people buying businesses, there's still people investing in businesses. And you also mentioned net zero. That when we talk to people more and more now about net zero is becoming more and more important. What we are seeing is that there's a conversation to be had that net zero and changing your business to become net zero or to become a sustainable business shouldn't be seen necessarily as a cost, because actually if the biggest cost in your business is your energy, and you do something to reduce that cost, then actually you're sort of hopefully securing the long-term efficiency of your business. Now, and I suppose that brings me on to Simon. So Simon, I know that, you know, throughout the pandemic, if I refer back to those dark days that of the not too recent past, lots of businesses pivoted, you know, successful businesses pivoted, many successful businesses restructured. And I suppose that's where you come in terms of the advice that you can give to businesses. And it'd be interesting to get your take on how, you know, what role these professionals can have and what is your role in that at the moment.
Yeah, sure. Thanks very much, Justin. Yeah, it's certainly been an interesting few years, hasn't it? It's been very different, unpredicted, and we're kind of seeing a bit of a fallout from that. I mean, what I'll talk about initially is just a bit more about, I guess, who I am, but as a professional advisor, what we get involved in and how we can help businesses, and then I'll give some thoughts on the economic conditions that we've seen and perhaps what might happen going forward. So as you said earlier, I'm a director in Assets Restructuring and Insolvency team based in Manchester. It's actually an international accountancy and business advisory practice, but it does have a focus on SME. So our kind of go-to-market, if you like, is national-based advisor, but very much into SME sector. So we do also have a local focus. So general practice, multi-service advisory accountancy. My particular expertise is helping businesses that are either stressed or perhaps worse, distressed, just helping them to navigate financial and operational headwinds. And no doubt there's been quite a few of those recently and will continue to be. I'm actually a licensed insolvency practitioner as well, which means where necessary, I can take appointments as a liquidator or administrator where companies are unfortunately unable to avoid a formal insolvency process. However, much of my work is kind of what I would term restructuring advisory. So that aims to help businesses take preventative and corrective actions, preventative before the problems occur, and then corrective where perhaps they have occurred, but it's not too late to avoid that sort of doomsday scenario. Problems I see vary, but almost always revolve around cash, which is clearly the lifeblood of any business. Issues are either created internally, so you might have poor working capital management, overtrading, lack of robust financial and management information, or sometimes they are actually externally driven, and that can be things like loss of customers, changes in regulations, or a loss of financial support. So I think you touched on it before, but my day-to-day work can vary between anything from kind of short-term cash management, undertaking an independent business review on behalf of a stakeholder like a bank, and also things like accelerated sales processes. So sometimes it becomes necessary to put a business through an accelerated sales process because there's a burning platform, i.e. cash is running out, and therefore the only solution available to that business is to sell it to a willing funder. So in terms of economic conditions and kind of, these are my observations and my views and opinions, obviously, but as I said before, it has been an interesting few years. The pandemic certainly restricted the ability for companies to trade, but it also rightly introduced a plethora of government support and legislation to protect those businesses. So, so there's kind of a bit of a double-edged sword there. More recently, we've seen a cost of living crisis, which hasn't been helped by war in Eastern Europe, which has caused energy costs to increase. This has prompted a further significant government funding package in the tens of billions to assist businesses in meeting those costs. So my sort of view is, it kind of appears in recent years that we've been living this age of the government check, where the government's been very helpful, and rightly so in a lot of instances, in helping businesses that have been struggling because of these external factors that have come upon them through no fault of their own. But I think inevitably we will see that government check, if you will, coming to an end. We've also had things like the Chinese government's zero COVID policy, which has hamstrung businesses who rely on supply from the Far East. At the same time, we've had volatile and exorbitant shipping costs, which has decimated business confidence and its ability to kind of properly cost. So whilst costs have been acutely increasing for businesses, it's also been extremely difficult for those costs to be passed on to their customers and to the consumer. If we think about where we are now, when we look back, we've had a decade of ultra low interest rates, which has kind of fueled a booming property and construction sector and has enabled businesses and consumers to kind of borrow cheaply. So money's been available and it's been cheap. In my day-to-day experience, I've seen a lot of this kind of bullet payment type lending, where as long as you can service the debt in the interim and refinance the capital at the end, everything's rosy, and can continue. But I suspect that there'll be less of that funding available. It's already been touched on, but there is a lot of capital and debt funding available out there still, and it remains available to businesses. My view is, I think large parts of that are probably funded by private wealth. Those people that are lucky enough to have private wealth, they're desperate to put that money to work and try and generate returns. So, you've got in Manchester alone, there's a lot of private equity out there. There's a lot of alternative ABL type funding out there. More recently, we've had high inflation. So the Bank of England's starting to put the brakes on by raising interest rates, but probably has quite a delicate balancing act to play. So there's not to sort of stymie economic growth or cripple the consumer. If you think about that consumer, myself included, they've only ever really known low mortgage rates, and so would likely to struggle if even there was a small percentage increase cost on their mortgage. So it does feel to me, and at the risk of sounding doomy, and I don't mean to be, because I think there is a lot of opportunity out there for growth, and I think we will still see that. But it does feel like we're going to go through a period of a bit of an economic reset, where there always needs to be a natural kind of reallocation of resource, putting, where resource is perhaps not being put to good use, just to reallocate that. And that's where I can come in sometimes, just to kind of do away with those businesses that perhaps have been struggling and were even struggling prior to the pandemic, and absence that kind of government support would have perhaps failed, and make sure that resource is being put to better and kind of more efficient use to kind of fuel good growth, rather than just to continue to prop up an ailing business that as I say, may have failed pre-pandemic. So I guess, and as I say, it's not all doom and gloom for me. I do expect whilst I do expect the trend in insolvency rates to continue in the short term, to continue to increase, I think there's still plenty of opportunity for enterprise growth out there. So for now, I think my snippet is management teams just need to have their fingers on the pulse. They need to be preventative wherever possible. And this is where professional advisors can be very powerful. So it's all about good management practices for me, you know, quality and reliable management information. And that includes something like a short-term cash flow review. Good working capital management is essential, you know, managing, you know, accelerate your debtor payments, try and stretch your creditors where you can, look after cash. And also a big one is just maintaining dialogue with stakeholders, because, you know, don't bury your head in the sand. Often stakeholders that they want to, and they're willing and they're prepared to help your business wherever they can. So it's important that you engage with them as early as possible. And that's about it for me.
Thanks, Simon. That was very insightful, actually. Just before I move on, the Q&A is open, so if you do have questions, please feel free to put those questions in there. I've seen that we're starting to get one or two coming in now, so I'll go to those. I think that being in sort of a number of meetings such as this over the last year, one thing that does always seem to come out of the discussion is during tough times, it's the businesses that tend to come out of it really well are businesses who can show leadership, strong leadership. They've got a strong leadership team. They communicate well, and I wrote down earlier, you know, about trying to prevent people from putting their head in the sand, because very often by the time they pull it out of the sand, it's far too late, and the business cannot be saved. With that sort of leadership piece, Roxy, how if I just come to you first on that leadership piece, what does MMU do in order to sort of help and develop the qualities of leaders in some of the programs that you deliver?
So we do it in various ways. I probably should have included it in my little intro, but yeah, so at the centre, we kind of align all our programs, our portfolio programs, into three areas. So we have our growth strand, surprise, surprise, our digital strand, and net zero. And I think I can see the question kind of that kind of leads on from that, in terms of it's a really common trait, whether we work with micro or quite large kind of larger SMEs, is that in most instances people start a business because they're good at the thing that they do. They don't necessarily have all those other skills, and it's a really, I think, you know, genuinely we hear from insights from businesses that that's the hardest part of running a business, is the sales, is the marketing, is the leadership, is managing people, because all of a sudden you can find in those instances you've got a lot of responsibility without actually having the textbook to do it. So I think in terms of our programs, we tend to cover that depending on the theme of the program. So within our growth provision, predominantly, leadership definitely fits into that. So and I think to some extent, and which has become quite a predominant kind of element of leadership theory, is almost that authentic leadership. Because if you think about, you know, I suppose where this all spiraled from, the kind of authentic values-based leadership, it was the last financial crash of like 2008 and the implication of the financial sector. I won't go into that, but I think that has risen that kind of domain of leadership, where being quite self-aware as a leader about your skills and how you want to translate your vision, purpose and value as a business. But it is all of those softer skills as well. So how do you do sales and marketing if that's not your forte? And we almost get back to basics with them. So I think to some extent it can be that we'll cover a session on sales and marketing, or we'll even do a session on business models. Because I think it sometimes seems very simple, but a lot of business leaders do not get the time out of their business. So it's that time to reflect, be very focused. So we do pull a lot of theory at them, but it's not in a undergraduate context. We put that theory into actions, and what models can they utilize that can be absorbed and used. And in some cases they're doing it and they don't realize they're using a model, an academic model. So yeah, we kind of draw on that, and in some instances as well, we'll give them the insight but a lot of the time they don't need to be an expert. They can outsource some of this stuff. And that's what we're finding more and more, that especially if you think about digital marketing, you know, trying to keep up to speed with that's really difficult. So if you've got somebody who you can outsource, that you can trust, that understands your business, outsource. If the cost, if you can kind of facilitate the cost, do it. So probably going in a really roundabout question, but yeah, our programs are themed, and it is about kind of building all those different building blocks, whether it is growth or digitization. So we have a couple of projects around cyber security, AI, and again, I think we've all touched on it, I think, in elements of what we said. The pandemic really accelerated that digital transformation, but I think there's still assumptions on the level of digital literacy that businesses have, and that can vary. So I think there's an element of kind of understanding where businesses are. But yeah, there's a whole suite of programs that we deliver, and we're waiting to find out on some bits. Hopefully, we're hoping tomorrow we'll have announcements. But yeah, we kind of deliver a whole range of portfolio programs. So if people are interested, they can come. We're based in the business school, Centre for Enterprise at Manchester Metropolitan. So our whole provision is on there.
Fantastic, thanks, Roxy. I suppose there's it's one of the first questions that come through from those that are watching the meeting today is how can other financial professionals such as Chris, Roxy, and ICAEW members, what can we do to intervene so businesses don't end up needing Simon's services? So, Chris, can I bring you in on that one?
Yeah, thanks, Justin. So, I mean, I think I touched on it quite early on in the presentation, but I think it's that relationship element again for me, and I think it's having relationships again with the bank, but also with lots of other people that can help as well, professionals. I think where we see that infrastructure, and I think Roxy touched on it as well, where we see that infrastructure in place, then, you know, we tend to see businesses surviving, thriving, flourishing. So I think it's about asking for help early on as well. So I would always encourage every, business we spend time with, it's about being open and honest as well, and engaging with us early on if they're worried, they're concerned, and there's any issues. So there's lots around that. And again, I think I touched on earlier, I think sometimes as well in the bank that there are occasions where we can't help. But again, it's having the ability in the networks to be able to point people perhaps in the direction where they can get that help that they may need at that time. So, if it's something that we can't necessarily do for whatever reason, who can we actually, who can we point them in the direction of that can actually help them with that issue at that time? So they're the main things that I would say, Justin.
Yeah, I think it's all about trying to reframe how businesses react as well, isn't it? Because, I as you probably tell from my accent, I'm originally not from the Northwest, and there's a tendency, particularly from a business, and if you're setting up your own business and that business is on a particular journey, that there's a sense of, well, I don't really want to talk to people about what's happening in my business, or I don't really want to be able to, my business might be struggling at the moment, but if I talk about my business struggling at the moment, that can be seen as a sign of weakness. The walls will start to circle, and it will lead to one place. And it is that, I know I sort of coyly referred to it as sticking your head in the sand, but effectively that's one of the sort of key drivers, is that it's perceived as a weakness of management to talk about potential problems within your business. And these are some of the really important things that we need to get over. So Simon, I know that I'm sure that these are the sort of things that you would have come across multiple times throughout your experiences.
Yeah, I mean, I'd go further than that. Just actually, it's actually imperative from a kind of fiduciary duty point of view, really. The moment you think there's trouble on the horizon, and I often refer to zone of insolvency. So the business isn't knackered just yet, but it might just be creeping into this zone where, you know, cash is becoming a bit tight, creditors are becoming stretched beyond what you would term the normal course of business. So as any director in that situation should be speaking to their stakeholders, seeking advice wherever possible to try and manage that situation. And you're quite right, you know, any stakeholder I ever come across, the last thing they want is for a company to go into a formal process, say, because the likelihood of decent recovery from that is very low. They'd much rather try and see if there's a solution, a preventative solution, such that the business can continue to initially survive and then thereafter thrive. So yeah, there is also that kind of fiduciary duty angle as well around directors and their responsibilities.
Yeah, absolutely. And I think that's really important. And not to forget actually as well that directors have a responsibility to themselves. They have responsibility to the people that they employ. And I know sometimes, and having been involved in lots of small businesses in the past, that you know, when a small business goes, it's much more than just a statistic. You know, it's a family, it's a livelihood, it's jobs, and all these things. So it's absolutely imperative that people are engaged right from the very start of the process, because as I said earlier, you know, you're there to try and prevent that from happening. The bank is there to try and prevent that happening, because nobody really wants to lose any money out of this. And again, it's a case of making sure that finance professionals are up to speed with what we do, that we're consistent in our approach, and that we are ready and able to signpost people to get it. I think sometimes that, as you said earlier, it's a case of being able to spot some of the red flags and to be able to use that experience and intuition that you have of working with businesses to be able to spot that, to challenge it, and to say, look, you know, this is what you need to do. This is the sort of support that you need. And just going back to that, we've got another question that's come in, and this is probably more for you, Roxy, in particular, the sort of work that you do with the local growth, with the growth company and the other bits, and that is, what support is available to help business owners develop the skills they need to run their businesses, finance, marketing, sales. I know that from a university perspective, it might be a little bit more difficult to offer those sort of skills, but again, I suppose there's so much that you do with some of the stakeholders that you work with.
Yeah, no, I mean, we do under our growth strand, and actually with the majority of our programs, there is always, even if it's like an R&D or an innovation focused program, there's still an element of kind of finance and marketing and all those skills, because if you are innovating and doing new products and services, you've still got to do the market research, understand the needs of the customer. So we do cover that. And we do partner, you're right, we partner with the Growth Hub on several initiatives. We actually form part of the Leadership Hive across Greater Manchester. So there's a couple of the initiatives that we deliver and that we could partner with the Growth Hub. At the moment, we are in a transition phase across the majority of organisations that access funding because of Brexit. So delays to funding have occurred because they're still working out, I think, what they're doing. So you will find there's still European regional development funding kind of knocking around, if I can use that term. But in most cases, it's winding down. So most activity will be end, which means the support that you can give to somebody ends by June. And as I mentioned, we've got the Innovation Accelerator. So there are very nervous people waiting for bids to find out what's going to happen, but there will be across the UK, there's funding. So I think, as I said in my kind of little piece, the Growth Hub, generally, I would say, go to and seek your Growth Hub. It'll look very different in different areas. So in GM, we've got a really significant Growth Hub, well established, been doing what it does for a long time in different areas across England, because this is all England based. It will vary, but I think that is your business, that's your go-to, whether it's a website or there's an advisor you can speak to or an event. That would be my view. Go to them and see, because even if it's not provision that they have, we all, generally anything that's funded, there's a memorandum of understanding. You work with your Growth Hub because it's about supporting that wider business support ecosystem. So I think go to them. Equally, organisations like the Chamber of Commerce, Federation for Small Businesses. There's lots of membership organisations there for small businesses that can also link into provision. So it's a busy space. I think it's surprising how many people don't understand the support that's there. But I think once you tap into it and you engage and you build that network and contacts, it is surprising what is available. But I think start off with the Growth Hub.
Yeah, that's great. And again, you know, running your own business sometimes, particularly at times like this, can be quite a lonely experience.
Indeed.
And to be able to bounce ideas or share experiences with people who are in a relatively similar position can be very, very powerful.
Yeah, the peer-to-peer element definitely is important, and a lot of our programs, it's not just about our input as experts, it's the peer-to-peer element, because they're not alone. Actually, the problems that they perceive they have are within their own context, but yeah, many people have experienced similar scenarios. So I think it's really powerful to build that network or engage with things where you've got that safe place to talk to peers.
Yeah, fantastic. There's one coming here, I suppose, I feel sort of obliged to answer myself, which is how do professional bodies like ICAEW support smaller accountancy firms to establish themselves and succeed? Well, as you know, as people who complete their ACA qualification and become chartered accountants, they can have a license to practice. Now, many of them will be working with firms. In order to become a chartered accountant, you have to have so many hours, you have to have your work experience, and then after a certain amount of time, some members decide that they'd like to go and start their own practice. And what I would say is that an organisation such as ICAEW has a website. There's tons and tons of information. There's regular events through the regions team, through ICAEW's main events team, that are there to support people who want to set up their business. And in fact, throughout the Northwest, we have a thriving sole practitioner and small practice group of members. And I know that they're always really looking forward to meeting people who would like to start their practice. So there is an awful lot of support. And again, I suppose that comes down to community and it comes down to networking. And there's clearly a theme, I suppose, going through the conversation today. Simon, there's one question came in a little while ago, and I've been building up to this, and obviously hopefully giving you time to sort of get your head around the question that has been put forward by Anthony. Please, can you explain clients' take-up rate you would have experienced in customers utilising your professional advisory services pre and post COVID-19?
Yeah, sure. I guess people would expect me to say it's a lot busier now, but actually, on balance, looking back, I think it was busier for me shortly prior to the pandemic. It is getting busier now, and I think it will continue to get busier. And then that period in between, as I say, where there was a lot of government help available, we just went very quiet, because not only was the funding packages there, there was legislation in place, such landlords, for example, couldn't take any enforcement action against people not paying their rent. If I think back to the 2009 crash, every insolvency practitioner and restructuring professional in the land was waiting for this tsunami of business failures, and it just never happened. So and I think we're there again now. I'm not expecting there to be this cliff edge moment where there's just a raft of enterprises that are going to start struggling and go bust. I think it will happen over a period of time, and in parallel with a lot of success stories and a lot of growth. It's just that natural sort of reallocation of resource. But I started my career in 2005, and arguably that was boom time. But I was also very busy in my restructuring world, and I think that's because often we get busy where transactions are happening and there's funds availability and there's deals that can be done, and so it kind of conversely we can often get busier as the economy is starting to grow, because that provides opportunity for businesses to exit out of their current situation and start with something new. I am getting busier now, but the things we're seeing at the moment are kind of, it is that real dead wood where, you know, unfortunately the businesses are knackered. They don't have much cash in there. There's not really a lot to rescue, and that shows in the insolvency stats. The insolvencies are massively up, but it's predominantly what's known as a creditors voluntary liquidation, which is very much a director-led process, which they can initiate themselves, and there's not a lot in that business, and it's just sort of killing that business off so that they can focus on other projects.
Yeah, and I think, again, I know that we had a brief catch up yesterday, and what we were talking about a meeting that I'd had, and members were referring it to as a hangover from COVID. And whilst it's saying, well, it's quite difficult to compare pre-COVID and post-COVID in terms of insolvencies, because what we have at the moment is the pushing through of all those that probably would have happened had COVID not happened.
And by the way, a lot of what we see now could be a hangover of the 08-09 financial crash, because don't forget, after that, we had 10 years of really low interest rates, which just meant that a lot of businesses just could continue to survive. Yeah,
exactly. So I suppose it's a perfect storm for that, which is probably seeing one of the reasons why we are seeing so many people who are going to that. Now, I'm very aware that it is 4 minutes to 2. So we're getting very close to finishing. I don't know if anyone has any last things that they want to add before we go for the close at 2 o'clock. I think one thing that we wanted to try and put across today in today's meeting, thank you very much, Simon, Roxy, and Chris for being a part of this conversation, is that whilst the perceived headwinds might be quite negative at the moment, some of the things that we've heard talk about today is business startups. Manchester's a wonderful place to start up a business, as is the whole of the Northwest. And we have traditionally seen that when things are hard, when we are entering recession or when we're in recession, it might sound a bit strange, but actually the amount of people who start up businesses increases. And it's really important that, I suppose, as an industry, banking, finance, and education, it's really important that we are consistent in our approach to making sure that we can help those businesses flourish and survive and move forward. I've got one last question, Chris, and you're going to have about 30 seconds, I think, to answer this. So see how you get on. This is a question: are banks open to provide finance at the moment, or are credit conditions tightened? That's a good question for 30 seconds, isn't it?
30 seconds, the answer is yes. So look, so we are very much open for business in terms of providing funding and finance. I guess linking into some of the things we've discussed previously, and I think Simon touched on it quite a bit actually, it's about that those non-financial elements in the business and demonstrating that strong management team and experience, and also backing that up with some viable financial elements as well, in terms of both a backward look, if it's an established business, as to what's been happening with that business now that's been performing, or, you know, a forward view in terms of forecasts with assumptions. But I think, I mean, there's reference been made today to the sort of financial crash 2008, 2009. I think this is very different to then, I would say. And actually, if you look, banks are in a much stronger position, not just my bank, but more broadly speaking, banks across the board, UK banks. And I think, you know, even during COVID, I was pretty proud really of how we reacted and what we did at that time in terms of supporting and providing that support. So, you know, as I said in my presentation, please reach out and ask. Don't wait for us to come to you. We'd love to be able to speak to everybody, but it is challenging. So, you know, please come and ask the question and speak to us with a plan, and we'd be happy to support.
Brilliant. We've got about 30 seconds left. So at the risk of me being cut off mid-flight, which I know lots of people who know me well would probably like to do, I'm going to take the opportunity of finishing. So again, thank you very much for being involved. It's been a wonderful conversation, and I look forward to seeing you all soon. Thank you. Have a great day.
Thank you. See you. Bye.